It's time for Tap That Trade. Joining us right now, Knuckman, the Chief Market Strategist of BullseyeOption.com, and Phil Flynn, a Fox Business News Network contributor. Here we go, guys, with round number one, FOMO or NOMO. What do you say to people who are so afraid that they missed the market bottom buying?
Well, I'm always a glass half full guy, and we're at the halfway point of this drop from the top. So in my world, that means we have a lot more upside potential. But you're never going to buy the bottom. You're never going to pick, the turn like we had in the financial crisis in 2009. We had the COVID turn. We had the Brexit. We've had numerous times where the market's turned. You've got to remember there's a lot of upside. You're never going to buy at the bottom. And there's always an opportunity. It's much different than when Phil and I were young kids trading in the pits and so forth. If you miss the opportunity, you really regretted it. Right now, there's opportunities every hour, every minute, every day, every week.
That's why I don't sleep, because of that. But Alan's right. And I think there's too many people out there who have this fear of missing out that maybe shouldn't be trying to time the market. If you're in that situation, you're like, boy, I missed this trade and then I bought it too high and it came back. Don't try to time the market. Maybe dollar cost average. Set a certain amount of your account every day and just buy a little bit of everything every month and continue to buy it. And over time, you won't miss the bottom because there's always going to be a pullback and you're always in the market. And if you do that over a period of time, your average price is going to look very, very good over the long run. So that's the way to do it if you're worried about market timing. Or you can get a dart, which I have clients that do that, and that works too.
Round number two, farm sale. Drought is forcing farmers to plow crops under and sell cows due to a lack of water. What does that mean for the future of futures? This
is one of the worst droughts we've seen maybe in 100 years, but not unexpected. This area gets a lot of droughts over time. And the thing is that it's going to impact food prices. It already is. We're seeing it in the grain markets. We're seeing it in the cattle market. We're seeing feeder cattle go down. A lot of people can't afford it. So in the short term, it's going to bring a lot of beef to the market, get those prices down, but you're going to pay for it at the end of the year around the holidays. So if you can lock in and order those, long-term steaks for the Christmas holiday, don't wait, do it now because those prices are going to go up.
So what you're saying is there's no doubt there will be a drought and we need a freezer. Everybody needs a freezer. Steaks are on sale right now. I was amazed at how cheap steaks are compared to where they've been. And so if you've got a freezer, load up now because if they pull supply out, then in the future, there's less cows for that beef. So, there's a lot at play here. And we always talk about that in the futures markets, it's always positions for a price pop. You don't know what it's going to be, but there's so many things can cause those supply demand dynamics to change. Another thing is China is having an extreme drought, and the third largest river in the world is drying up. So it's not just us, but from a trade standpoint, there will be price opportunities.
Round number three, memo missed. The economy seemed to miss the recession memo. What stock should be on solid ground if the economy remains strong?
Well, part of that is the jobs. Obviously, that's the equation here. That we've had almost 10 million jobs created here. And we're actually seeing, the Wall Street Journal said that the largest growth in reshoring, that's it, bringing jobs from overseas to America that's ever happened. So that's going to continue. That's going to cause two things to happen. That's going to, pay. Corporations are going to have to pay more for American employees, obviously, and then robots. They're getting more robots right now because of the labor shortage and the high price of labor. So a lot of these are positives. And we've seen that in the market bouncing 20% off the lows.
The thing you got to remember is stocks sometimes do very well in a depression. It depends on what stocks you have, right? They've done very well. And I'll tell you, one of the things I'm seeing here in the market, everybody's freaking out because all the stocks they're watching aren't doing as well as they were, your Pelotons and, all of those things. But I think you go back to the old stocks, get out of the high flashy tech stocks, start moving into oil. Think of oil and gas stocks as a new tech because they're the ones that have significant upside and are undervalued compared to these tech stocks right now, especially because they're printing money like crazy.
Old is new, but Micron is one of the biggest reshorers, and they spent hundreds of millions of dollars building new facilities. If you look at that stock, some of those chip stocks have been beaten down. So from risk reward, I think there's some opportunity there.
It's time for your bonus round, guys. The Girl Scouts are out with a new cookie. What flavor is it? Lemon drop, raspberry rally, or cherry berry?
I want raspberry rally. Actually, I would like to take the lemon drop, raspberry rally, and combine those two. That would be the perfect cookie.
I think they had a lemon drop before, so I don't think that's new.
Right.
So I've got to go with the raspberry. I'll go with the raspberry thing.
We have two winners. It's the raspberry rally.
Whee! Raspberry, terrific. All right, terrific.
Go to businessfirstam.com for where to see our show on TV.